We've been getting a lot of questions about inflation and where we think it's going. The broader conversation has turned towards a belief that inflation seems to be getting stickier than we were originally anticipating. To that point, we want to say that we still believe that inflation has come down and will continue to come down, and that the Fed is still going to be cutting rates significantly by year end, with rate cuts starting later this year. To make that point, we have three charts. First one looks at the stickiness of wages. Wage growth and red-hot jobs market are often cited as the reason the Fed is unable to cut rates. But what we've been seeing recently is that people have been quitting less, which tends to be a forward indicator that there are less higher-paying jobs out there, so they're staying where they are. This suggests that we're going to see softening pressure on wages going forward, which will give the Fed some flexibility to begin to cut. This next chart is simply a colorful way to display all the Fed inputs that they look at when figuring out CPI, the Consumer Price Index, and more than 50% of those are already below the Fed's 2% benchmark, specifically pink, purple, and green. The number of components that are above the 2%, orange and yellow, are shrinking very, very quickly. And we expect to see that continue to shrink, and the total inflation number will continue to drop. And this is not just a US phenomenon. As we're looking at this third chart, we've seen the same thing happening across the board. Internationally, as the average core inflation in the US, EU, UK, and Japan have all dropped to a target level of right around 2%. So it's for these reasons that we expect to see that the conversation about inflation will begin to change and the Fed will be in a better position to cut rates. Again, these are just our expectations. Things can change, the world changes, but this is our base case expectation. Thanks for watching. If you have a question about this or anything else, just let us know.